Hi everyone and welcome to today's morning report on Tuesday the 1st of December with me, Richard Perry, market analyst at Handtech Markets. European trading's got off to a mixed start really. There was a decent handover from Asian trading, but the positive intent has just slid away slightly, but nothing too significant. You're still seeing some reasonable gains on the FTSE, but the DAX and the CAC are slightly lower now. Interesting that we've seen this move in the last day or so, whereby the dollar has corrected actually. And that basically started to come on the back of yesterday afternoon's data out from Chicago on the PMI data, the regional PMI data, came in well below expectations and also into contraction territory. So the sort of inference from that was that that could have implications for future growth on the for the states. So the US 10-year yield fell quite sharply into the afternoon, back towards the day low, and also the US 2-year yield came off the highs as well. So that is just putting into place a bit of a dollar correction, really. And we've seen a bit of a move against that across the majors, really, pretty much across the board. Euro, sterling, yen, Aussie dollar. Yeah, pretty much all of them are strongly, well, not strongly, pretty much all of them are against the dollar and rallying. The big move is actually coming in the Aussie and the Kiwi. The RBA had their announcement overnight. They remained steady on their monetary policy at 2% interest rates, but also gave a pretty reasonably upbeat statement, actually, considering what's been going on there in Australia. You've still got they pretty much kept the same statement, but also added in a line on credit growth, which has been improving. So the market's taken that positively, and the Aussie is 1% higher as a result. And it's interesting because this move is continuing today on from yesterday afternoon. Now, we've got the PMI data out throughout the morning. Actually, the Chinese data came in mixed. Actually, the manufacturing data for the official number came in lower than expected. The Cajun data came in higher than expected. But then you had the services PMI, which actually saw an improvement on last month as well. So it's a fairly mixed outlook from the Chinese PMI data across the board. And then we've had the Eurozone data early on in the session, and that's pretty much came in line with expectations for the region, but several countries, Spain, Italy, and Germany, all beating expectations there. So some pretty reasonable numbers coming out from those PMIs. Now we look forward to the UK PMI data at 9:30. You can see here, last month was strong at 55.5. That was the highest since Q3 2014. And what we have got in store is an expectation of 53.6, so slightly back from where it was last month, but certainly still that would be again a decent number considering the 6 months in a row where we were below 52. So that would be a decent number. 50.5 is the expectation for the US ISM data. And that would be a slight improvement, but again, not a great deal. So, would that have an impact on the 10-year and also the dollar? It seems as though at the moment that the market is pretty much nailed on for a December rate hike, but all these data points that suggest that the future growth expectations are not all that great could weigh on the dollar, and that may be seen today. So that's what we're looking out for. But anyway, my chart of the day is the DAX, and the DAX has had this huge run higher. 22% it's had a run higher since the end of September. Interesting that it has these key consolidations around the Fibonacci retracements of this that big rally from 8355 up towards 12390. The consolidation around the Fibonacci levels has been consistent, and we're now up towards the 23.6% Fibonacci level, 11438. Yesterday's high and today's high at 11430. So interesting that that's happening just around this Fibonacci level. We've got strong momentum across the board pretty much on the DAX daily chart. But interesting that if you actually look on the intraday chart, the momentum isn't quite as strong, because look at the MACD lines, which are falling away. Slight bear divergence there on the MACD and also the stochastics, and arguably also the RSI as well. So if you saw the hourly RSI falling below 58, that would be a failure swing on that, falling away on the MACD lines as well. So it's interesting that if this little mini correction continues on the DAX, could it be that we see a bit of profit taking coming through? The first main support comes in around 11,250 with a couple of reaction lows from the last 2 days. And that could come under pressure if this sort of momentum continues to sort of be lost in the DAX. Last series of candles really on the hourly chart have been pretty negative really, so we could be that we may be about to see a minor correction back towards that 11,250 mark. Now this obviously comes in front of this ECB meeting, and I think that is obviously the big risk aspect for the whole week on the DAX, because anything that, say for example, Draghi disappoints and doesn't or underwhelms in the QE extension, then you could well see a euro rally and therefore a DAX correction. So that could well play into that. But it's interesting that this is all happening around this 23.6% fib level. And that could well be that we're seeing this consolidation and possible correction coming from this level. So I wish you good luck in your trading on the DAX today, and I will speak to you later. Thank you.